Thanks for tuning in to Countdown. My name is Neeraj Shah, and let's take a look at what's moving the markets and what's not. It's been a iffy day of sorts. We haven't. The expectations were that at the rise we would crack, and which we have, yes, and then we'll come off quite substantially. Now, what happened? If you look at the intraday of the index, I'll just spend about 30 seconds here. You will see that the Nifty Bank, for example, came off from the highs of the day, nudged into the red, and then inched up about 2.5%, almost showing some bit of resistance to correcting further, but that was quickly sold into as well. Not quickly really, but latter part of the day it got sold into, and currently we are 0.75% in the red for the Nifty Bank, and that is dragging the markets along with it. The other big problem is that it's not a uniform move upwards. So for example, infrastructure is not necessarily in the peak of health, but Adani Ports is up about 8.5%. UPL has cracked about 9.5% after the news, despite clarifications from brokerages as well that the news flow may not be entirely true. There is weakness in Vedanta. There is weakness in Reliance Industries, despite the fact that Bharti Airtel has had a phenomenal outing in the session today, and that tells you a picture or two about what kind of move has been in Bharti Airtel as well. So it's been a very interesting day of trade. We'll mark more stocks as we go along, but I think our experts should be with us in any moment, and we'll try and talk about that. So my producers will alert me when our experts are with us, and I'll go to them. The other problem is stocks like HDFC Bank, which are down about 0.87%. So banks have looked weak, and some of the stronger hands have come off the session today. And therefore that's the problem. Okay. I think we do have Brijesh Bhatia with us, if I'm not wrong. Yes, I think my producer tells me we have Brijesh Bhatia with us. Let's get him on board. Brijesh, good having you. Thanks so much for joining in. Appreciate your time. What are your thoughts, Brijesh? How do you dissect today's session? Because we have sold off from the highs of the day, but we're not quite falling very, very strongly. It's not been a one-way ride today.
Good afternoon, Neeraj. Yeah, I think when if you look at the support which the whole series was holding, if I just look at the May series, we tried to breach 9,000 couple of times. We went back to around 95, 9600, again back to 9,000. So this time we have breached those level on the downside. And in yesterday's session, we have seen swift selling pressure coming in. And if you look at the Nifty 500 breadth, for the first time in the whole May series, in fact, I would say post mid of April, we have seen first time more than 300 stocks turning out to be in a bearish territory. If I just look at the RSI, they have just moved back below 40 mark for the first time. More than 300 stocks has been on the downside. So it's clearly indicate that the yesterday's downfall was very much severe. Stocks were beaten aggressively. The stocks people, those who were holding from lower levels, have exited from the stock. Today, next tried to breach 9,000 levels, unsustainable move back below 9,000 levels. Even if you look at the Bank Nifty whole series, it was holding 18,200, 18,400 zone. Yesterday we breached those levels. We tried to sign off a failure, but 18,100 attacked as a resistance zone today, and again we are back on the downside. So I think bearish momentum would continue into the markets, and we might see these rally towards 16,500, 16,600 on the downside. Even if you look at the hourly chart of the time cycle of hourly chart of Bank Nifty, every momentum, so if I just look at the precisely every 34 hours, we are witnessing the trend change momentum. So we are still into the 17-18 hours of the current bearish momentum, which started from around 20,000 levels. So I think more another downside could be continued till the 21st of May. As per the time cycle, and I'm expecting momentum towards 16,500, 16,600 on the downside. I would take a short bet. 17,500, 600 could be a good short opportunity. Today's high can be kept as a stop loss, and look for 16,600 on the downside.
Okay, 16,600 on the downside. What are the specific stocks that you're recommending in this regard, Brijesh, then, if this is your view?
Yeah, I think if you look at the ICICI Bank, we are witnessing huge short build-up coming on the stock. We have seen stock from 307, 308 back to 330 zone, but it was aggressively sold. We have huge short build-up coming up. We have seen 300 psychological level and support zone on derivative structure swiftly taken in yesterday's session, though it's been taking a hiccup in today's session, but I think it would again move on the downside. So ICICI Bank stands out to be a good short bet upside at 301, 300 levels, keeping a target of 280 on the downside. Because I think these writers, 300 put writers, might come into the panic once this 280, 296, 295 is broken out, and we might see swift downside towards 280. So ICICI Bank stands out to be a good short bet for me. I think IT would come back very strongly now, because we have seen IT convincingly holding right from 9300 levels to 8800 levels. We haven't seen IT moving downside at the pace Nifty has been moving. So I think I would play a reversal bet on Tech Mahindra at current point of time. It's holding 490, 500 levels quite strongly. Today also we have seen it been right from 503, 501 back to 517, 18 levels. So at 513 current level, one can look for a long bet, keeping a stop loss of 499 and look for target of 545 on the upside.
Okay, well, Dharmesh Kant joins in his new role, I'm guessing. Dharmesh, sorry, I don't have access to my studio details. I'm guessing you are an independent financial advisor as of now. Please correct me if I'm wrong. What's your sense on the market and the weakness that we're seeing?
Yeah, Gautam, Neeraj, I am functioning as an independent advisor, so nothing wrong out there. I think today's... Sorry?
Pleasure having you.
Yeah, thank you so much. So, but what's wrong is with the markets. I think today, rally not materializing has been a bit disappointing. To my mind, I think the correction part of the market is over, and the worst as far as the activities are concerned is behind us. So from here on, if you look at the activity cycle on the economic front, it has to be better than not bad, or so the lockdown thing, the strictest form of lockdown we have seen in the worldwide, we are through that, and from here, even if the scare of this virus increases, then we are better prepared to face that. So I think volatility is there. It will be there in the market for some time to come until something really material emerges. Till that time, this market is more of a buy on decline rather than a sell on the rally. So if you are looking even as a trader for 2 to 3 months kind of a perspective, so testing 10,000 levels is very much on the card, and I'm pretty sure by the time we end this calendar year, the market would be fairly above 10,000. And I have my own reasons. Like I did some mathematical modeling kind of postures, which we keep on doing on the companies. This time I did it on the number of virus and things like that. So though there is no evidence as to that, but it did throw up a very startling fact that the percentage has been decreasing quite significantly, and there has not been a steady way. It was based on assumption. How many people came in contact with this virus, and how many got actually put down by this virus? So you may be a COVID carrier, but your immunity is strong, and it did not affect you. So on those count, it's like almost around 1 in every 20 was, getting impacted by this virus. So I think we are through that. So fundamentally, this market is becoming a buy now.
Okay, fundamentally it's becoming a buy, but technically it's looking like slightly weak right now. That is the view from both our experts, and I think the views of a lot of people might differ as well, so be careful out there. But I want to talk about the two strong pockets right now. First, Brijesh, to you, the strong pocket is the Adani Group stocks. All of them have done very well. Power, ports, without exception, that entire pack is looking very, very strong. I don't know if you had one of the Adani Group stocks as your recommendations, but if you did not, can you look up the charts or one or two of them or the FNO positions and tell me which is looking the strongest?
Coming to the FNO, Neeraj, last week also we have gone through Adani ports, if you remember, at 303, 305 zone. Look at the accumulation this stock has been done between 270 to 300 zone. We have seen huge accumulation. One day strongest rally. We have seen shorts been unwinded. Yesterday we tried to move below 300. The momentum was unsustainable, and today we have gone up with a strong up move, breaking out of its the range zone which it was holding 310, 311. I think Adani Ports on the future side stands out to be a very very stronger bet as of now. So I'm expecting the stock to rally towards 341 on the upside, because if I just look at the flag pole, it's around 40 points flag pole, and we have seen a breakout at around 300 levels. So if I just add 300, 340, 41 stands out to be a good target on Adani Ports. In fact, we have also suggested client to go long on 320 call options on Adani Ports. We are expecting good upside momentum on this call.
Okay, the other strong pocket, Dharmesh, is actually it's not a whole pocket, but very curiously, Dharmesh, Reliance is cracking while Bharti and Vodafone are are really doing well. Bharti Airtel, as I speak, is at 599. That's 11% up move on this one. It's a remarkable uptick that we're seeing today. And Vodafone is not doing badly either. What are your thoughts here?
So I think both the companies are likely to do well going forward, and primarily because of the digital space they are into. So they will be more of a, rather than a call service provider, it will be a data service provider. That is how the future looks. But given the fact that how Reliance has played this card very smartly, I would still take this opportunity to, whether it is, coming down, to buy Reliance rather than go buy Bharti or Vodafone. So valuation-wise, because there's a completely new game right now. It's a beginning of an entire new world for them. So you cannot just put a valuation point on Bharti that is expensive, and Vodafone, survival is still a question in place. So that has still not been answered. So Vodafone is more of a rubber rally which is happening out there. Bharti is fundamentally strong. Valuation-wise, it can still, rally if you are looking at 3 to 4 years kind of momentum. 750, 800 can easily be on the cards. But given a choice, I would still stick to Reliance Industries, and I will take this advantage of the falling price to accumulate it.
So, wait a minute. Are you telling me that if you had Bharti in your portfolio, Dharmesh, you'll get out of Bharti and get into Reliance?
Yeah, definitely yes, Neeraj. I will be switching into Reliance and will be getting out of Bharti. Definitely yes.
Okay. Well, that's one call. All right. Do watch out for that. Bharti Airtel, though, is at 600. I would presume you see no, and we'll get to queries in a moment from now. I'm sure Bharti Airtel would be one of the queries people have, or maybe Vodafone Idea. But Brijesh, do you see any reason technically, and you may well see a reason, you may well not see. I just want to know, for somebody who has a long call on a Bharti Airtel and has seen this mammoth rally today, is it prudent to book profits, or is it prudent to carry home the long positions?
Neeraj, I would carry on with the long positions. I think still a good stem is left in the stock. So if I just look at the monthly chart, we have seen a stronger move, and look at the volumes for last 4 5 months. It's been tremendous, and huge volumes at the breakouts are very much stronger. Even if you look at the weekly, we have managed to hold 500 very strongly, which was the previous breakout level. So I think still a good stem is left. From 1 year's point of view, I'm expecting this stock to rally towards 780.
Okay, 780 from 1 year's perspective. Mind you, ambit target is 800. And I must tell you, viewers, I think depending on how the jigsaw puzzles in the telecom space start moving higher or moving ahead, you might well see stock targets getting revised as well. And again, Dharmesh's call might be well taken that people may move out of Bharti into Jio as well. People may well choose to do that. But for now, I think telcos as a pocket is looking very, very strong in trade. Ambit target, as I said, is 800, and Bharti in the call, I think, has said that from the current 154 rupees ARPU, they expect the near-term ARPU to move to 200 and then to 300. Imagine the ARPUs doubling if indeed they go there. They desire this, but if indeed ARPUs move to 300 from 154, can you imagine the beta on EBITDA that comes in for Bharti, and therefore the uptick on the valuation multiple? So that's the call. But as I said, tactically, according to Dharmesh, Jio might be a better pack. And I think viewers will have to use your own discretion before you try and choose this. Now, let's try and get in some queries from our experts. There is a long-term view that is required on Affle India by Shahu Mali. Dharmesh, do you track Affle India?
No, sorry, Neeraj, I don't track that.
Okay, Shahu, I have a small suggestion for you. I think we've just done a story on Affle India. It is getting curated. It will be published either latest today or tomorrow. It might be interesting for you to read that story in order to try and gauge of what you should do with Affle India. So do log into BloombergQuint.com and try and search for Affle India, AFFLE, and you might actually get your answer. Okay, there is a fundamental view required from Kevin Matthew on HDFC Bank. And Dharmesh, this is a valid question. The stock has come off quite rapidly after posting what I thought were very good numbers. Is it nearing a zone where you look to start accumulating HDFC Bank, or you would stay away?
No, it's a time to, start accumulating HDFC Bank. These are, quality banks to the play. And like if you're writing, banks like HDFC Bank or ICICI Bank, or for it with even Axis Bank, then basically what we are trying to do is we are writing off the entire financial story of India. And without financials, it's very difficult for the economy to survive. So I don't think the type of treatment these banks have got just because on the assumption that in the future there would be a lot of NPAs coming out post this lockdown thing. That doesn't hold a merit because they have been given a credit line, they have been given, regulatory approvals to just to, delay the, payment collection, which may lead to NPA. And I think it's rightly so. So we should give them the benefit of doubt as of now. And I firmly believe in the Indian economy, the resilience of the Indian economy, that it will bounce back. And see, it's only few pockets of India which have been impacted. Elsewhere, just a precautionary measure because of which the economic activities will be so they will bounce back. Among the pecking order, HDFC Bank remains the top pick as far as private sector banking is concerned, and followed by ICICI and Axis. So all three are buy to my mind.
Okay, so accumulate fundamentally is what Dharmesh is believing. He says it's amongst the best bets right now. Though there are technical views being asked for a couple of names. Since I'll start with Nitin Thakur's question on IndusInd Bank, and Brijesh, you want to comment on IndusInd Bank?
I would continue with the bearish stance on IndusInd Bank because we haven't seen stock, though it's been volatile in nowadays, but we have seen fresh breakdown in IndusInd Bank in today's session. So 420 till it doesn't breach, I'm expecting this stock to fall towards 310, 315 on the downside.
Okay. Preeti Menon is, by the way, Girish Sharma was asking for a technical view on Bharti. Girish, I think we have already taken that, so your query would have got an answer. The last query that we are addressing today is from Preeti Menon, which is a technical view on Jubilant FoodWorks. Any thoughts? The results come out tomorrow, so it might be a volatile stock, Brijesh, but it looks slightly weak today, if I'm not wrong. How do the positions, the derivative or the technical positions, look like?
I think if you look at the technical side, this stock might see slight under pressure towards 1430. So if your view is 14 for a short term, look for a short opportunity, keeping a stop loss of 1536 on the top, and look for 1430, 1435 on the downside. But if you are looking for a medium term point of view, I think I would suggest to go long around 1430, 1450 zone. We think this stock might see again an upside towards 1650, 1700 in 3 to 6 months point of view.
Mind you, viewers, the results come out tomorrow, so the stock could be volatile. In all probability, the numbers will not look as good. So you have to be mindful of that. But if they manage to beat estimates, then you never know what happens. As we speak, Bharti Airtel is 601 rupees. Really remarkable pullback in that stock. And the reason I use the term pullback is because yesterday it cracked all the way to 537 ahead of numbers, and then it's just had a one-way stellar move. By the way, Vodafone Idea has done that well too. Actually, Dharmesh, would you buy a Vodafone Idea? I know you said that you would look at Jio versus a Bharti, but this is a stressed company, and if ARPUs are moving up, it could benefit Vodafone too.
Yeah, see, if you go by the government of India's, view that they don't want to duopoly in this segment, they want at least 3 companies to survive. And going by that, and just for very high risk, investors or traders, it does provide you a very good opportunity. So some sort of, readjustment of the financial liability and some window given to them, if it is given, then definitely there's a chance. But let's not forget the type of customer base they have already lost in the last 6 to 7 months is humongous to either Bharti or to Reliance Jio. So one is survival, financial viability of the company, and the second phase will come when they start getting back the customers which they have lost, which I think is very difficult given the circumstances they are in. Even if you get a financial leverage on the balance sheet, but still getting back that kind of competitiveness which needs, cash flows in the P&L and balance sheet is difficult for Vodafone. But just as a very high risk, investors or traders, one can definitely take a bet on there. Maybe if whatever you want to allocate to this space, maybe 10% of that can go into Vodafone Idea.
Yeah, well, let's wait and watch how it shapes up as well. But I'm told Amar Singh joins us as well. And Amar, I will start off with a technical view on Reliance before we get to the top BTSTs. We'll take it in your index view in a bit. But what does Reliance look like? It's looking very, very wobbly. 1409 currently.
Yeah, looking at if you look at Reliance, what we are seeing on the long-term charts, if you look at the monthly charts, clearly it shows that there is a topping out pattern in Reliance, and the earlier high that was made in December, 1597, and recent high was 1594. So it clearly shows that that's a major 1600 is a major level of resistance where we've seen selling, and also if you look at the monthly charts, they clearly show that there is bearish divergence on the charts. So clearly reflects that the upside seems to be capped. Yes, on the downside, Reliance has got, if we look at it technically, so somewhere around 1330, 1350 is a support zone for Reliance, because that could be a support from where it could bounce back. But the stock definitely seems to have topped out.
Okay, so seems to have topped out, but certainly correcting and cracking under pressure. 1408 currently. Now, mind you, viewers, this is important because on a day when Bharti Airtel has hit these highs, Reliance Industries has corrected over 200 rupees from the recent peak, and that's telling you something. That's the company that has gotten 4 large investors, Facebook, everybody, but still the stock is correcting from the peak. I'm not saying that it has not rallied from those levels of 1200, 1250 or what have you. But the point being, to correct so much from the peak after an announcement for an investor came in, that suggests some signs of weakness. Now again, there's a rights issue on tomorrow. I think it's the date of the application. So I don't know if it stays that way until then and then reverses trend, but certainly looking weak. Amar, it's time of the show when we get in closing strategy. So let's do that first. Your top closing strategy.
I would say one can look at Biocon. This is one stock, technically, if you look at Biocon on the charts, on the long-term charts as well as the intermediate-term trend, clearly there is a positive movement on the chart, and also on the daily charts, the stock is moving from oversold territory. So currently it's around 337 levels, so any pullback in this stock towards 330, 332 levels can be used as a buying opportunity, with a stop loss of 313 and a target of 357 on the upside.
Okay. What about you, Brijesh? Your top BTST or STBT?
I would stick with ICICI Bank as an STBT bet. So it's currently trading around 301.50. Look for short as an STBT, keeping a target of 280 on the downside.
Brijesh, what's your call on HDFC Bank then? You seem to be bearish on banks. The bank Nifty has recovered a little bit from the lows of the day. But if you're so bearish on ICICI, is there a call that you have on HDFC Bank too?
HDFC, Neeraj, it's been trading at a slightly support of 800. So I would slightly wait for 795, 796 to breach and then look for a short opportunity. But I think chart has been into slight bearish territory already. I would slightly either look for a short below 795 or short around 872.
Okay, but you believe that will happen for sure. Okay, interesting. Okay, we have a very important set of numbers slated today. Bajaj Finance, I think the con call is at 6:30 if I'm not wrong. Dharmesh, what do you expect? I mean, the con call that they'd done earlier, which I think was the most widely attended con call ever in the history of Indian corporate India. And then the management had said that if indeed the lockdown stays till May 15th, then the credit cost will really spike. Now we know the lockdown is largely in place till May 31st with some exceptions. What do you expect the commentary to do? Is the stock baking in all the negatives?
I think the commentary, the management will try to put on a brave front and face while the commentary, but if you, reading between the lines, it has to be negative. So all the NBFCs are badly hurt. At least this quarter, Q1 of FY21 will be terribly bad for all the NBFCs. Q2 onwards, one has to see. So to my mind, it's the banks which will get advantage of this entire thing which has happened. But the NBFCs will take a time to recover from the ground which they have lost. At least this year has already gone for them. So I don't see any recovery from them. And incrementally, as the news flows and numbers will start crippling in, coming in, and they would be definitely, to my mind, will be bad. So this pressure will continue. So irrespective of the commentary which they give, I do think that next 2-3 quarters will be very difficult for them. So credit costs will go up, and the cycle will go up. Disbursement will go down. So the entire cycle for their profitability is into a jeopardy as of now, and it's very difficult for them to move on from where they are stuck. First they will try to consolidate. What can move up is the private sector banks like SBFC, Kotak, ICICI banks, and excess of the lot. So they will do well. So if you are still there, switch to SBFC Bank.
Dharmesh, we'll leave it at that. Thanks so much for taking the time out and speaking to us today.
Yes, thank you.
All right, what is doing, by the way, Vodafone Idea is on another orbit altogether. But I must point out Inox and PVR, both of them are doing really well. So in addition to the Adani Group stocks, these two are bouncing back very strongly today. Brijesh, any thoughts here? Either Inox or PVR?
I think I would stay with PVR because we are witnessing some shorts unwinding in today's session as stock has seen a move from lower levels. But yet a long build-up is not there, so I would wait for a couple of days to take a long bet. Probably I think this 830 stands out to be a resistance zone. So either 830 above 830 or some more unwindings to be happen because we have seen this stock straight away from 1200 breaking to below 800 levels. So I would wait for a couple of days.
Okay. Among stocks which are looking wobbly today, UPL and Atul Limited. Amar, any thoughts here?
Yeah, looking at UPL Limited, I would say the stock continues to trade lower, and technically it's very strong on the very weak on the charts, be it the monthly charts or the weekly charts. And today also the stock has corrected with significant volumes. Now the stock has got some strong support coming around 300-310 zone, but upside seems to be capped around 370 odd levels.
Okay. Anything on Atul Limited? It's not as liquid though.
Talking about Atul Limited, if I look at Atul Limited, it's currently around 4200 odd levels, and again huge volumes today. So technically, I would say continues to. On the long-term chart, it's not that bad. Meaning the stock has got some good support somewhere around the region of 4000 odd levels. But it seems to be topping out. There's some topping out pattern on the upside towards 4500. So it's a range play for that. Long-term trend is still better as compared to many other stocks.
Okay, very quickly on AU Small Finance Bank, which is down 3%. Brijesh, any thoughts?
Yeah. AU Bank, right, Neeraj?
Yes, it is active today, but down.
Yeah. Yeah, I think I will buy at 374 this stock because we have seen bullish divergence, RSI bullish divergence coming on this stock on daily, weekly been trading into oversold rate. So 374 stands out to be 161% of the move. So I'll look for long bet at 374, keeping a stop loss of 360 and look for 415 on the upside.
Okay, Brijesh, quick 30-second view if you can. ONGC or Oil India?
Both to be a short bet. Neeraj, ONGC seems to be a better short. Stop loss 79.5 and look for 72 on the downside.
Or on the downside. Okay, fair call. So short call today. Never mind the strength that we've seen on ONGC. But watch out, as I said, the multiplex stocks, the telecom stocks, and the Adani Group stocks. They have literally set the stage on fire today. And the indices, I would say not a bad close simply because I didn't expect this. I really thought that by weakness in the bank nifty would come back to bite, and it hasn't quite happened. For once, I mean, we did say that we'll see selling at the high of the day, but I did expect the markets to go down even further. But who am I to predict the markets, isn't it? Nobody can. But yes, there has been weakness in the Nifty Bank for sure. 17,510. It is closing down weak. I think what's come to the support, never mind the fact that Reliance is not doing well, are names like Bharti Airtel, which have had such a strong move. But the likes of ONGC, which has not done too badly for itself, some of the commodity names, so ONGC, Ultratech Cement, JSW Steel have all looked strong. ITCs look slightly okay. HDFC from the financials has looked okay. So never mind the weakness in HDFC Bank, but HDFC's looked okay, and ahead of numbers, Bajaj Finance is closing higher about 2%. What has looked wobbly? Well, yes, some banking names also there, but UPL takes the center stage. Vedanta post this board meet corrects about 2%. There is weakness in Reliance. That's the big concern. That is correcting at 1409 or thereabouts. That is looking very, very weak. And stocks like Cipla, L&T, Nestle, there's a bit of a distribution. I think it's happening. It's no longer that pharma and IT are doing well and banks are not. I think it's a bit of a mix, a bit of a jamboree of sorts that we're seeing at the large cap end. At the mid cap end, well, the likes of PVR, Inox, Adani Power, Adani Transmission, that entire bucket of stocks has done really well. At the peak, at the pinnacle on the Nifty 500 though, is Vodafone Idea. And normally I didn't like talking about Vodafone Idea, but the commentary from Airtel, the submissions that Airtel and Jio have made to the departments, various departments for upping of data charges and upping of mobile telephone revenues, they not only augur well for them, but augur well for Vodafone Idea as well. If it can manage to sustain through this period, then even though it's a distant third, there might still be some value maybe in Vodafone Idea. Mind you, Ambit Capital today came out with a note and a target price of about 18 rupees, if I'm not wrong, on Vodafone Idea. So there are some people who find value there. I think it's fraught with risk, and maybe Airtel is a better bet or Jio is a better bet. But having said that, keep in mind that there is an equal number of people out there who are saying that India's pure play FANG stock, which is the jab that people take now at Reliance, because there was a lot of buying, frenzied buying, saying that it will be India's truly that one big FANG stock. It may well turn out to be, but today a pure play telecom story is doing well. Reliance is not, and that's the stark difference to my mind in today's session. Mind you, even when it comes to oil and gas, upstream, Oil India, ONGC doing well, Reliance is not. So there's some technical factors that are pulling in Reliance down, more so also the kind of run that it had. But 200 rupees off from the peak, that's about a 13% drop from the near-term peaks for Reliance Industries. Let's see if this lasts. Final thoughts from our experts. Amar, we haven't taken your index call. What do you think? Do you reckon that there could be some support at these levels for Nifty or Nifty Bank, or do you reckon a correction is underway?
Overall, if you look at the trend, the long-term and the intermediate-term trend, that continues to be extremely weak. There's no doubt about it. On the daily charts, however, what we are seeing is we are seeing a lot of consolidation happening, and Nifty is taking very strong support coming around 87, 8800 levels. And also, if you look at the daily charts, we are seeing that it is in oversold territory. So we are seeing this sort of response. On the upside, what's happening is that somewhere around 9200 levels immediate, where we could see some resistance. It's more of a choppy trading session, and I would say one definitely needs to be cautious about.
Okay, so needs to be cautious. Let's say if we start slightly lower tomorrow, Amar, would you initiate fresh shorts on the Nifty or the Nifty Bank?
If the short is to be initiated, then somewhere a good level is somewhere around 89.50. On a bounce back, a shorting is a better opportunity rather than shorting at on the lows of the day.
Okay, on the bounce back. Fair call. Brijesh, we've taken your index view. My question to you is more on what do you think heavyweights like Reliance, HDFC Bank, these two essentially, and a TCS have in store in the near term?
I think still STEM is left for Reliance, so I'm expecting 1330, 1350 on the downside on Reliance. HDFC Bank, as I said, seems to be a short bet. Probably we might see this stock heading towards 715, 720. So another 100 points down can be expected on HDFC Bank. One stock which can drag Nifty more down is I think HDFC Limited rather than TCS. So I think IT is holding some ground, but HDFC, look at the HDFC, we are witnessing huge selling pressure every time it comes slightly above 1600 level. We see a huge shorts build up coming up, and these shorts are still holding since the mid of April. So I think HDFC seems to be a better short, and that could be one stock which could drag Nifty slightly lower. I'm expecting 1380, 1410 on the HDFC, so which is another, I guess, 8-10% can be seen on HDFC Limited. So that would be the one stock which can drag markets more on the downside, and ICICI Bank, as I discussed.
Okay, I think I'm losing Brijesh, but we got the summation of his answers. And by the way, I think Maharashtra has brought about some relaxations to the lockdown as well. Frankly, with the way the people are moving around on the streets, this lockdown may not be serving its entire purpose, but nevertheless, there are some relaxations that have been announced, and maybe that's the reason why PVR and Inox are doing what they're doing today. Let's see if some of the malls and some of the others too start showing some traction. But Brijesh, as well as Amar, gentlemen, it was a pleasure having you today. Thank you so much for taking the time out and speaking to us. Viewers, a couple of things. One important notification, we will be back at about 3:45 or thereabouts with the market wrap daily, where we talk about the near activities and maybe talk about a few queries or points that you might have. So do try and log in across our social media platforms and try and interact with us. And of course, as we head into the break, you hear out a very important market voice, Manish Gunwani. He spoke to us earlier in the day. He spoke about sectors that he's still wary of and where he thinks is the best place to allocate capital right now.
Consumer staples is one we've been underweight. It's hurt us a bit. Although even in that, I think a few stocks have done well. A lot of the second-tier stocks haven't done well. I think one of the spaces where we are underweight is consumer discretionary in certain segments like consumer durables, for example. So these stocks have done well last 3-4 years. But we do think that there are big earnings headwinds for next 1 or 2 years. And the valuations don't factor in the fact that the competitive intensity in this space can go up very fast. The moats are not really deep enough to justify the 30 to 40p kind of valuations. So we're staying largely away from consumer durable stocks.
Okay. My final question out here, Manish, if you were to look at asset allocating right now, because of the valuations and the negativity surrounding, would the equities be a larger allocation right now, or do you believe tactically maybe that step is some time away? Let the dust settle and then probably go overweight equities. What is your thought?
I think that equities over 2-3 years can give good returns, but I also think that the credit funds or credit products have to do well for equity to do well as well, because I don't think the economy can take off until some of the credit spreads which have widened recently come down. So I'm positive on equities. I'm positive on credit as well, and I think both are linked. See, my simple point is that if good corporates have to pay 10-12% in the bond market, I don't think the economy can pick up, and without economy picking up, equities cannot work beyond a point. So I think these are two areas where, from a 2-3 year perspective, I think good return can be made.
How many places can you be at once?